Everybody, hope you're well as we move through mid-February. Of course, Valentine's Day coming up February 14th as a reminder, but the Olympics is the big topic right now. Winter Olympics happening in Italy. We've got the flag up here, plenty of decorations around the office to support Team Canada. Always fun to watch all the various sports in the Olympics. Another reminder, March 2nd is the deadline for RSP contributions to have them count towards your 2025 income. So if you're planning to make a top up or a lump sum that you haven't done, then be sure to do so and let us know if we can help or if you would like some guidance around that. We are definitely happy to help. Looking at the markets as a whole, a lot of talk about the volatility, a lot of headlines out there sparking positive days followed by negative days, followed by positive days. And that's generally what happens. So just a reminder that volatility is normal in the markets. And you can see in the years where there's a lot of negative days, there's often a lot of positive days of over 1% moves in the market. So yes, we've had some volatility, and yes, we're going to continue to have volatility, but it is normal in the markets to have those. And actually, over the last few years, the volatility has been relatively lower than we've seen through much of the last 30 years or so. So keep that in mind. And the other piece is that just because you had a big negative day doesn't mean that's going to continue. Often those flow together. So, and we've seen that big news on Greenland sparking a massive sell-off, and then a couple positive days rebounding right back where we were. Of course, we're positive overall. Here's an interesting chart. 19% of the stocks in the S&P 500, so getting close to 100 of those 500 stocks at 52-week highs, meaning their stock price is as high as it's been in the last year. Doesn't usually happen. You can see the charts there, a few spikes in this metric, but when you're over that 19% number, look at the bottom there and see how that plays out. You can see in the shorter term, 1 to 3 months, there is potential for some negativity, but 6 to 12 months later, you can see in the last, going back to 1993 occurrences, we've had positive returns and above average positive returns 6 months and 1 year later on average. So a good sign there as we look forward that the market breadth is continuing. That's always a good sign for the markets. It's not just those big tech companies. Here's another indicator that breadth is positive. We can see the number of stocks that are over their 50-day moving average, which means take the stock price over the last 50 days, average that price. If they're above that, then they're above their 50-day moving average, and you can see almost 68% of the stocks are above their 50-day moving average. So a good sign there, and you can see the market's moving up on the bottom. Another good piece to look at here is looking at expected earnings from corporations. So of those S&P 500 companies, looking at how they're forecasting going forward, all positive through 2026 and 2027 estimates, thinking things are going to pick up even more in 2027, but a positive year in 2026 as well. You can see, go back to 2020, things were very uncertain there. Companies were forecasting lower than previous year's estimates for earnings. Not a great sign, but we've got some positivity right now with those corporations. Speaking of diversification, we've talked about these big tech companies. Here's 3 of them over the last year, all negative. So some drops. Of course, the market's kind of cherry picking that drop in last spring, but rebounding nowhere near as quickly as the rest of the markets did. Microsoft had a good pop, but has come right back down again. So roughly a negative 5%, whereas you've seen the markets up 10, 15% off of those bottoms in the last year. So another case for diversifying those accounts, not just globally into different asset classes, but even if you're looking at the US, you have to look at the small caps. You have to look outside of that S&P 500 that's market cap weighted, because you're going to get too much exposure to some of these tech companies, which is positive when all of them are running, as we saw in 2023, but less so in the last year and a half or so. Not to say they're bad companies or that they're not growing. As you can see here, Amazon's revenue almost $130 billion in 2025, which is just amazing to think about. That amount of revenue is equal to the bottom 469 companies in the S&P 500. So just to show you how big Amazon is and how big these tech companies are and why their market cap weight is so big in that S&P 500. The 469 companies adding up to the 129 billion in revenue last year that Amazon did. Just amazing numbers. So that's it for me this time. We'll have some charts out again in a couple weeks. I hope everybody has a great family day long weekend, and go Canada. Continue to watch the Olympics, support your team. Take care, everybody.